we are looking at CVP, cost volume profit, or what we call break-even analysis. But this time around, we are selling how many products? Many products. We are selling many products. Now, a quick reminder. We said for a single product, what do we have, ladies and gentlemen, for a single product? X break-even will be equal to fixed cost of what here, somebody? CM. But when we talk about multiple products, then our X break-even will be equal to fixed cost over WACM. Like that. So please write that. And then you write somewhere, or before you write somewhere, yeah, we can go on and say revenue break-even. Revenue break-even is fixed cost over CMR. Yeah. And then for multiple products, revenue break-even will be fixed costs over WACMR. So where WACM stands for weighted average contribution margin. Weighted average contribution margin. Weighted average contribution margin, and a WACMR will be weighted average contribution margin ratio. Ratio like that. Weighted average contribution margin ratio. So once you guys are able to draw this kind of a small chart, and you've been able to elaborate and tell us what this WACM and the WACMR stand for, mention there Y for yes, for me to continue. Mention there Y for yes, for me to continue. And my handwriting is not the very best, but you can see here, WACM stands for weighted average contribution margin. Weighted average contribution margin. And then WACMR stands for weighted average contribution margin ratio. Contribution margin ratio. At least I have some ninjas online saying yes. So I'm waiting for all of them. I can see one has said no. We shall give you 1 minute because everybody shall be comfortable. Before we continue, everybody should be comfortable. Everyone should be comfortable. Everyone shall be comfortable. Yeah, at least I can see many thumbs ups, which is really, really very good. Yes. So can we continue? And this is how I direct we should move forward. I would want us to look at our revision kit. So this revision kit, I would want us to, not revision kit, but you call them past papers. So from your past papers, I would want us straight away to go to December 2024, question number 5, boy. 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 Management Accounting CPA. And of course, whatever we do here is pretty much applicable to the ATD students. Actually, the ATD students will be very happy because they will get presents, all of them. So we are told here December 2024, question number 5, boy. Maya Limited produces how many products? They are not one, but what here, somebody? 2. So I know straight away that I'm dealing with multi-products or multiple products. Namely product M and product Y. The following budget applies for the year ended 30th June 2024. I can see the selling price, variable cost, contribution margin has been given there, and the fixed cost is given there. Units sold, I can see it is 70 million for M, and then Y is 30 million. So they want me to give them the current break-even point at current sales what year? Current sales mix. So this is really straightforward. Yeah, because it's multiple products. This is how I shall be able to handle this question. So this is how we handle this question. They want us to give them break-even point, and we have multiple products. So then X break-even, I know it will be total fixed costs divided by what here somebody CM if it's a single product. But when there are multiple, what do we do, somebody here? Yeah, it's like in this case here, you are surprised. So you say, wow, because there are many. Weighted average contribution margin. There are two products there. So I know what will happen. Many students will not be able to know how to calculate this WACM. But WACM for my students, they love it. They know that our WACM will be equal to weight of the first product multiplied by contribution margin of the first product plus weight of the second multiplied by contribution margin of what here? Contribution margin of the second. There are only two. If there were three, I would have continued, right? If there were three, I would have continued. So weighted average contribution margin equals weight 1, contribution margin 1. Weight 2, contribution margin 2. Now, ladies and gentlemen, in this question, they have given us the contribution margin of the first product. Have they done that? How much is the contribution margin of M? 404. 4 or 204? Or just 4? How about contribution margin 2? 8. Thank you very much. So in this case here, then we have these weights. These are weights. And the weights shall always be the sales mix. Sales mix. Sales mix. Weights shall always, don't forget this, that sales shall always be the sales mix. So if you look at this question very, very well, they have told us to give them, in this case here, break-even quantity using the current sales mix. So do we know how many units are currently being sold? How many units are currently being sold? If you read the question very well, ladies and gentlemen, they have told us here, they want us to give them the break-even point at the current sales mix. And you can see currently units sold in terms of bags, we have 70 million. So we have here M, which is product 1 basically, and then we have Y, which is product 2. Yeah, so it is 70 million vis-a-vis what here, somebody? 30 million. Giving me what total sales? 100 million, isn't it? This gives me 100 million. So remember, we want these sales mix proportions. Sales mix proportions. So then this will be 70M over 100M. This will be 30M over 100M. Yeah, so this will be 0.7 and this will be 0. What here, somebody? 0.3. 0.7 and 0.3. So please never forget that sales mix stands for the current number of units here being sold, not unless you're told otherwise. We are looking at the current number of units that are being sold. So up to here, by any chance, are we really together up to here? Online guys, are we together? I don't want to leave anybody behind. Thank you so much. Then please go ahead and give me the WACM. Go ahead and give me this WACM. So we already have the formula. We know this is weight 1. Weight 1 is 0.7 times contribution margin 1 that you guys gave me as 4 plus 0.3 times contribution margin 2, which you guys gave me as 8, like that, which you guys gave me as 8. So let's get ahead and give our examiner the WACM. WACM. Let's go ahead and give our examiner the WACM. So they're giving me a figure of 5.2. Are we able to see the 5.2 figure? Yeah, great. So then I would want you guys to do me a favor. Now we have everything. Please go ahead and give me this X break even. Go ahead and give me this X break even. So I'll give you exactly 2 minutes because now you have everything. You know, in this case here, the fixed cost. Now we have everything. Now we have everything. So it's upon you to now go ahead and give us. You go ahead and give us X break even. The worst mistake you can ever do is to calculate X break even for each product separately. So whenever you are given fixed costs for individual units, you consolidate them, you add them. So give me the total fixed cost first. The total fixed cost. So you took in this case here, how much plus how much? They are not talking to me. So you took 96,400, isn't it? So it is 96.4 million plus what here, somebody? 200 million, isn't it? 200 million, which give you guys what figure? 296.4 million, isn't it? Thank you so much. So then the X break even will be 296.4 million divided by 5.2, which will end up giving me what figure? To get X break even, I remember we have everything now. We have the total farm's fixed cost, 296.4 million, divided by the weighted average contribution margin of 5.2. So then at the end of the day, we are able to get 57 what year? 1,000, right? 57,000 units. So X break even equals 57,000 units. X break even, X break even, X break even equals 57,000 units. And at times, after we've gotten break-even quantity, they would want you to continue with the same, but end up giving us what we call revenue break-even. So when they want us to get revenue break-even, if they wanted us to get revenue break-even, what do you think in this case here would have we done? Revenue break-even. What do we do? I'm so sure somebody will tell me, Mwalimu, use the concept of CMR. Before I go to the CMR concept, this is how I shall be able to very comfortably convert this number of units to revenue. Very comfortably, this is what I shall be able to do. I will come and break this down to product M and product what here, somebody? Y. So is there somebody who can give me the criteria that I will use to break down the combined quantity? Anybody who can give me the criteria that I shall use to break down the combined 57,000 quantity? Already we have proportions. We know that M is 0. What here, somebody? 7, and this one here is 0.3. So you take 0.7 times 57,000, you give me an answer. 57,000 times 0.7. Yeah, Carol, don't go to 1 to 1. No. Remember, we are still doing this question under the current sales mix, which is 70-30, which is 0.7 and 0.3. I hope you are in agreement. I hope we are in agreement. I hope you are in agreement. We haven't gone yet to part 2, where they are talking of 1 to 1. 0.7 times 57,000. This gives me what figure? 39,900. Like that. How about Y? 0.3 times this? Please talk loudly. 17,100. 17,100. Thank you so much. And you are the students who told me that, Mwalimu, when you have this number of units, to convert this to money, you know that revenue will be equal to price times what here? Quantity. So these are the individual quantities. So go ahead and multiply them with their prices. So do we know what the selling price of M is? Anybody who could be knowing the selling price of M? It's given in the question, isn't it? 6, Selling price of M is 6. How about selling price of Y? 12. Thank you very much. So then are you able to give me this number and this other number? So we have here the revenue of M versus revenue of Y. We have the revenues already. We have the revenues already. So we have the revenue from whatever shall give me. The revenue of M, which is 39,900 times 6. How much are we getting? Please, online ninjas, talk to me. Massive Yator, 239,400. 239,400. Thank you so much. How about Y? Y is 17,100 times 12. 17,100 times 12. How much are we getting? 205, 200. Thank you so much. So then giving me what figure in this case here as total revenue break even? Total revenue to break even. You take this plus this. Total revenue to break even. So I'm being given a figure of 44,444, 600. Like that. 444, 600. So before I proceed and do the same question using the CMR model, I would want a confirmation from you that we are doing great, that we are together. You may not be understanding, but at least if you're together, that's really good as well. So are we together somehow? Are you able to follow somehow? Yeah. So please feel free always to ask questions because I'm always happy to help. Always. I'm happy to help. When you help people, you make money. Helping is very good. Helping is very good. Helping is very good. Now, method 2. Method 2. So method 2 of getting this revenue break even, is basically to use the WACMR method. Yeah, WACMR method. So then the question will be, how do we get this WACMR? Before I show you how we get WACMR, would you kindly reiterate by telling me here the formula of CMR? Contribution margin ratio, how do we get it? Don't be very shy, don't look down. You shall always look at Mwalimu, even when you don't know anything. Always. Always. Or is that why we are on mask today? We shall overcome. We shall overcome. We shall never fear Mwalimu. Never. So it is CM over what here, somebody? CM over price, isn't it? So when they tell us to calculate WACMR, then we come and add the words. So you say it is WACM over WAP. Like that. WACM over WAP. That is how we calculate our WAC what here? CMR. That's how we calculate our WACMR. So it is WACM over WAP. I don't have a problem with WACM. This WACM, you guys gave it to me as 5.2, unless you have forgotten this. Are you able to remember this figure? Yeah. Then we go to the WAP. Is there somebody who can tell me the criteria I shall use to get WAP? WAP. Thank you so much, Millicent. At least you gave me the formula of CMR. So WAP, anybody who has an idea? An iota of an idea? So this WAP, ladies and gentlemen, I will take the weight of the first product multiplied by price 1, isn't it? Weight of the second multiplied by price of the second. Fortunately, I know the weights. You guys may have forgotten, but me, I know them, including the prices of our products. Are you able to remember the price of our products? Yeah. So remember, price 1 was what here, somebody? Yeah. Thank you so much, Caroline. Yeah. I'm wishing you well. Yeah. Great. So 6, right? So 6 plus weight 2, which is 0.3, times the second price, which is what here? 12. So 0.7 times 6 plus, in this case here, 0.3 times 12. So this will end up giving us what figure? 7.8? 7.8, isn't it? So then please go here and substitute. Go here and substitute. Already now you have everything. So we know that our WACM is 5.2 and our WAP is 7.8. Are we able to get a beautiful ratio? Are we able to get a beautiful, beautiful ratio? Let's see. WACM over WAP. WACM over WAP. So 5.2 divided by 7.8. What are we getting? So not beautiful, right? Recurring, right? So then I would want you to use the figure that you have in your calculators. The more the decimal places that are recurring, the more accurate we shall be. So then can you kindly remind Mwalimu the formula of getting revenue break even in a situation where we have multiple products? It will be fixed cost divided by WACMR. Are you able to remember our total fixed cost? Oh yes, it was 296 point. I'm alone. 296.4 million. All over this big figure that is on your calculator. All over the big figure that is in your calculator there. What figures are they getting? 444.6 million. 444.6 million. That is the revenue that we collected. Using the other method that I showed you guys, how much were we getting? The same figure. These guys are not excited. We got the same figure. We got the same figure. Yeah, we got the same figure. So which method will Mwalimu recommend? Which method do you think is the best? The first one. Because I know the biggest mistake that students make. The biggest mistake that my students will always make, and that costs them, they will always say something like this, something funny. This is funny. This is funny. If you do it this way, then you are not a scholar. You'll get somebody saying that WACMR equals weight 1 times CMR 1 plus weight 2 times CMR 2. This one, if you write it like this, go ahead and draw an emoji for your examiner, and that should be a very sad emo, because this is wrong. We only have one way of getting WACMR, which is CMR over, not CMR, but CM over P. But in terms of what now here with the weights like that. The weights. You take the weighted average conditional margin over weighted average what here price. So the very best method is for you to get the break-even quantity and then you split it out. That way you will never go wrong. That way you shall never go wrong. I don't think this method is really making you to be happy. Let me show you the third method. Third method. Maybe the third method will be easier, right? Let's see. Third method. I have method 3, method 4, method 5. But third method should be the last one. Method 3. Yeah. So is there anybody who is able to remind us the quantity that we need to sell to break even? XBE equals who? I'll give you the answer. 57,000, isn't it? 57,000. And how do we get revenue break even? How do we get revenue break even from this? You will basically take, in this case here, quantity sold. You multiply this by what here? The price. So I don't have a problem with the quantity sold. It is 57,000. But now I have a problem with the price. So which price am I going to use? Remember, we have two prices. Which price should we use? Should we do picky ponky and then we select one? We shall use weighted average price. Weighted average price. So in this case here, because of multiplicity of many prices here, so use WAP. So is there somebody who is able to remember? Remember, we did WAP with you guys. We did WAP with you. We did WAP with you. We did WAP with you, isn't it? 7 point. So shall we be able to get that key 444 thing? Let's see. That for 4,600. Shall we be able to get it? The same, isn't it? Interesting. So if this method is easier, then I'll do another method. Oh, those are enough, eh? These are enough, okay? All right, okay. Thank you so much. The online students, are there in agreement with us that those methods are enough? The online students, are they also in agreement that those methods we've done here, they are enough? Yeah, too much of anything is poisonous, right? Yeah, great. Then if you allow me, I'll now be able to go to number 2. And to be very honest with you, we shall always recommend method number 1. Always, we shall recommend method number 1. Let's now do number 2 together. Number 2. So number 2, they want us to give them the break-even point at a proposed sales mix of 1:1. So if sales mix is 1:1, what do you think will our weight be? Pata potea. If sales mix is 1:1, what do you think in this case will be the weight of product 1? You shall not look down forever. You shall always look at my face. Even if I'm mzee, you look at my face always. So 1:1, weight 1 will be equal to 1. No? A half, isn't it? Which is the same as 0.5. 0.5, yes. 0.5. In online students, nobody saw that. Online students, nobody saw that. Online students, nobody saw that. Online ninjas, nobody saw that. Adan saw it. 0.5. Thank you so much, Adan. So Adan has been able to know that if the sales mix, if we have here sales mix, so we have MY, this is 1:what here? So when I add the 2, I get what here? I get 2, so a half. So it means that weights will be equal to 0.5 and then 0.2. 0.5. Is that okay? Yes. Great. So it doesn't matter. If, for example, they tell you that the sales mix is 2:3, if they tell you it is 2:3, you know that this will be M, this will be Y. So it means the total is what here? So then it will be 2/5, 3/what here? 5. This is just but, by the way, obiter dicta. Now let's see what you guys will be able to do for Roman 2. Let's see what you shall be able to do for Roman 2, where now they want us to give them the break-even point. So break-even point at the proposed sales mix of 1:1. So I want you to get the break-even point in quantity and then a break-even point in sales revenue-wise. So that one, I'm leaving it to you, and I'm giving you exactly 5 minutes. You'll be among the very first ones to get it right. Then I will be able to give you a present. Is that okay? It has been a long time since I gave anybody a present. I would want you to get my present today. Today, not tomorrow. All right. So we are doing it together, ladies and gentlemen. This is it. So remember, they want us to give them the break-even point at a proposed sales mix of what here 1:1. The most important thing is that if it is 1:1, then we know that 1:1. If I just start doing this quite fast here, so the mix is 1:1 for M and Y, giving me 2, isn't it? So then the proportions, which basically will be our weights, will be a half and a half. So this is 0.5, this is 0.5, like that. Is that okay? And then now remember, how do we get WACM? To get WACM, we shall take weight 1, contribution margin 1, isn't it? Yeah, plus weight 2, contribution margin 2. So the first weight now is 0.5. Contribution margin 1, you guys had given me a figure. Do you remember the figure you had given to me? It was what here, somebody? It was 4, isn't it? So this was 4. Yeah, plus 0.5, which is the second weight, times contribution margin 2, which is 8. So then this one here will end up giving me what figure? 6. Thank you so much. 6, thank you so much. And therefore, X break even will be total fixed cost over CM. Because there are multiple products, WACM. The total fixed cost you had given me 296,400,000, isn't it? Over these 6, which gave you guys what figure? 49,400, isn't it? Now, this 49,400 is what you are able to split into our Y, or rather M. M and who? Using a half, using 0.5, isn't it? Using 0.5, using 0.5. So then this one here gave us, so M. If you split, M will be 49,400 times 0.5, which gave you guys what here, 20? 148, no. 20? 24,700. The same with Y, 24,700. So to change this to money, you simply attach the selling prices. The selling price for M, you had given me a figure of what here? 6. Selling price in this case here for Y, you had given me a figure of 12. Therefore, revenue, so it will be this times 6, isn't it? Which gives me how much? 148,200. Yeah, and then 24,200 times 12 gives me 296,400. Yeah, so total 444,600. 444,600. Is that okay for everybody? Is it okay for everybody? Are you sure these answers are okay? Thank you so much. Thank you so much. Thank you so much. Then we go to number 2. So number 2, what do they want me to give them? Number 3, I mean, they want me to give them most. Most stands for what? Your margin of safety. Margin of safety. Margin of safety. So they want me to give them margin of safety. How do we get this? It's expected sales minus the BEP sales all over what here, somebody? Expected sales, like that. Times 100. Times 100. Yeah. So which one do they want us to calculate most for? Of course, they don't want both of them. They don't want both of them. They want us to give them the current. Current means the 70-30 ratio, isn't it? Current. So if you remember very well, you had gotten expected sales for the 2. No. Current expected sales. Yeah. In terms of units, you combine the 2. So it is 70 million units plus what here, somebody? 30 million, which gives us 100 what here? 100 million units. So they come here and they give us margin of safety, most. Margin of safety. The expected sales, I'm being told, is 100 million minus the BEP sales. Remember, preferably, this should always be in units, preferably. So BEP sales, for the current mix, when we did it, we got some figure for the BEP sales. I should not be sharing the screen. They need to see the screen. They need to see the screen. So BEP sales, break-even point sales, was it 44? No, 57,000? Was it 57,000 or 57 million? 1,000. Who is now telling me the truth? The figure was in millions, Okay, so minus 57 million divided by what figure here? Somewhere down here. Divided by expected, which is what here? 100 million, yes. So please take this minus this. Whatever answer you get, you divide by 100 million. Whatever point something you get, you multiply by 100% and then get to give me an answer, Millicent J. 𝐻𝐿𝐿. We are getting 43%. 43%. Thank you so much. That is really great. Great. So after that, with your permission, I will be able to straight away go to Roman number 4. Let me give you 1 minute. Let me give you 1 minute. Let me give you 1 minute. 43%. Thank you so much, Bevelin. That is very, very, very good. Very, very good. That is very, very good. That is very, very, very good. That's very good. All right. So the last one, for this question, they want me to do something very easy. They want me, ladies and gentlemen, to do something very easy. Give them the sales units required to earn a profit of 299 million at current sales mix. At current sales mix, they want me to give them sales units required to earn that profit. So in this case here, how many units do we sell to earn some targeted profit? What if you calculate the bags? Okay, not a problem, but really, margin of safety should be in the form of what a percentage, yeah. Should be in the form of percentage. Yeah, should be in the form of percentage. Yes. Then, ladies and gentlemen, go ahead and give us number of units we need to sell, number of bags we need to sell to be able to get a targeted profit. I gave you a formula. I told you X for target profit. Is there somebody who can remember the formula? Now you can see all of them, all of a sudden they have gotten something to look at on their books. Or that is how geniuses behave. So X for targeted profit. Fixed cost plus the targeted profit. Thank you so much. So fixed cost plus the targeted profit over what here, somebody? For CM. But you see now we are in a multiple product environment. So in that case, you must come and add what here? WACM. Thank you so much. So then give me these two things. First of all, give me the WACM. Anybody who is able to tell me what the WACM is? Remember, they have very, very categorically mentioned that they want of the current what year sales mix. The WACM we should pick is the first WACM. Thank you so much, Crispus and Mercy. They're getting 5 point what year, somebody? They're getting 5.2. Yeah. The other thing that I would expect you to give me is the fixed cost. Remember, fixed cost, once you have gotten the total for the whole farm, then that will be constant. Constant. You guys give me 290, 296, 400, isn't it? And how much profit are we targeting? 29 or 299? Yeah, 299 million. That kind of amount, that kind of money that if I got today, I will not be here teaching. May God listen to me, isn't it? Yeah. So we have here fixed cost of 296, 400,000 plus the targeted profit of 299 million all over the WACM of 5.2. All over the WACM of 5.2. So remember, this is 296.4 million plus 299 million equals whatever answer you get, you divide by 5 point what here, you divide by 5.2. What answer are we able to get? Quite an ugly figure. 140? 114,500. This is not ugly. This is very, very good, isn't it? Yeah, 114,500. Yeah, units or bags, isn't it? What if they want me to split this into the various products we have? Shall we use 0.5 or 0.7? 0.5 or 0.7? 0.7 because the question was about current. But remember, they never wanted us to do that. Whatever we've answered is what this examiner have asked us to do. So give me a big title there. Key limiting factor. Key limiting factor. Now we are coming to the very end of this great topic. Key limiting factor. Key limiting factor. So tell us there that, first of all, write the title. Key limiting factor. Thank you, Millicent Teach. This seems to be a new student. This is the first time I'm teaching this student, and she seems to be very, very aggressive. I like very aggressive students. I like them. I give them presents when I have money, isn't it? So key limiting factor, yeah. So a key limiting factor is a scarce resource. We are writing there, is a scarce resource. Is a scarce resource that prevents an organization from producing the maximum, from producing the maximum number of units demanded, from producing the maximum number of units done what year demanded. So it is that scarce resource that prevents your organization from producing what has been asked outside there. So if you have an organization that is making, for example, sodas, so it may be that, for example, the market wants you to produce 1 million sodas. This is what is being demanded. So if you have a resource that prevents you from producing that particular quantity demanded outside the maximum demanded outside there, then that product, that resource is limiting, is a scarce resource, Key limiting factor. Now, ladies and gentlemen, there are many organizations Sorry for the mishap. Kindly invite back all the guys that were in the class. Tell them we are back now. Tell all those ninjas we are back now. All right. And we shall be able to continue right away. So we've just explained that key limiting factor is that scarce resource that prevents an organization from producing the maximum number of units demanded. And we shall be able to take up a past paper question right away. And once we do this, then we shall be able to take a break and go and get dinner, isn't it? Sleep. So I want us to do August 2024, question number 1, cow. August 2024, question number 1, cow, medical limited. Medical limited, medical limited. August 2024, question number 1, cow. Are we there? Are we there? The online ninjas, have they been able to get this question? The online students, have they been able to get that question? Why they're not talking to me? I don't know why. I don't know why. They are not talking to me. I don't know why. They are not talking to me, those ninjas. I don't know why. Thank you so much. They have gotten it. Thank you so much. They have gotten it. So we read this together, that Medico is a pharmaceutical company which manufactures 3 types of medicines, namely alpha, beta, and zeta, using absorption costing system. The company has 2 grades of labor, skilled labor and semi-skilled labor. The following profit statement relates to the operations of Medico Limited. So I can see selling price, material, direct labor skilled, semi-skilled. Then we have fixed overhead. But most importantly, from the costs, they haven't given me variable overhead. But fortunately, they have given me the methodology of computing variable overheads. All right. So then what do they want me to do? I can see the expected maximum production and demand. Yeah. Then I can see number 1, they want me to compute the shortfall in skilled labor hours. Are you able to do that? Skilled labor hours, the shortfall in skilled labor hours. This will be a 1-minute thing, very easy thing. I can see under direct labor, I'm able to see some great things there. So I'll copy this. So under direct labor, this is what I'm able to see. Under direct labor, cost. So we have here shillings 80 per hour, 80 per hour. And then I have my products there called A, B, and Z. A, B, and Z. And I can see comfortably, ladies and gentlemen, it is 80, 160, 240. 80, 160, 240. So remember, this is labor cost. This stands for labor cost. Yeah, and I want labor hours. So can someone tell me, what do you think will I do to be able to convert this labor cost into labor hours? What do you think shall I do to be able to convert this labor cost into labor hours? We divide by, is it 60 or 80? It's 80 because we know that we are charging shillings 80 for each hour. So in this case here, then take labor cost divided by the rate. Take labor cost divided by the rate. So this is 80 divided by 80. This is 160 divided by 80. 240 divided by 80. So then this will be 1 hour. This will be 2 hours. This will be how many hours? 3 hours. So outrightly there, we have labor hours per unit. Direct labor cost. That is skilled. skilled. Direct labor cost, skilled. Skilled, we pay them a little bit expensive. A little bit expensive. So, ladies and gentlemen, do we know in this case here the maximum demanded units? Maximum demanded units. As this examiner given us, the maximum demanded units, oh yes. Oh yes. He has given us. The maximum demanded units, we are here. 3,000, 5,000 and what here, somebody? 6,500. Now, once I have this, I will very comfortably give you the labor hours required to meet maximum demand. I will comfortably give you this. How do I get this? This is very easy. So what I will do, I will come and take one. You know this per unit, eh? So it will be 1 times 3,000 plus 2 times 5,000 plus 3 times 6,500. Are you able to give me that answer? Maximum hours required to meet maximum demand. I'm waiting to hear from you. I'm waiting to hear from you. So according to Carol, she's getting 38,000 hours are required. Somebody else? How many hours are you able to see? 32,500. Oh, Carol, check again. 32,500. And then how many hours are available? Skilled labor hours available. Is there anybody who is able to see the skilled labor hours that are available? The skilled from the question, the skilled labor hours that are available, 28,000. You can see, ladies and gentlemen, in note 3, we are told there is a maximum of 28,000 skilled labor hours that are what here, somebody? That are available. 28,000 labor hours that are available. So in that case, are you able to see a shortfall? Yeah, we need much more than we have. This is scarcity. So the shortfall, scarcity, scarcity, this minus this, what answer are we able to get? 4,000 what here? 500 hours. I love this. 4,500 hours. 4,500 hours. Thank you so much. Thank you so much. So let me get feedback from all of you up to here. Are we together really? What many students are not able to remember is how to convert this labor cost into labor hours. Once you've done that and then you remember the definition of a scarce resource, a key limiting factor, that you are basically moving towards producing the maximum demanded units, but we may not be able to have enough adequate resources. All right. Ladies and gentlemen, after you do that, you shall be able to go on and tackle number 2. So number 2, what do they want me to do? Number 2, after computing the shortfall in these skilled hours, they want us to determine the optimal production mix and the number of units to be outsourced from chemist suppliers. So they want us to give them optimal production mix in light of scarcity. Here you are broke, you're scarce, you don't have enough skilled labor hours. So what do they want me to do, these great guys? These great guys here, this is what they want me to do. These great guys, this is what they want me to do. These great guys, this is what they want me to do. What they want me to do is to give them the optimal production schedule under a key limiting factor. Under a key limiting factor, or under a scarce water resource, or under a scarce resource. Key steps. Key steps. Number 1, Determine CM. Determine CM for each product, of course. Number 2, determine CM per unit of key limiting factor. Per unit of key limiting factor, or per unit of the scarce resource. Number 3, you rank the products. Rank the products using 2 above. Using 2 above. And then number 4, you now determine the optimal production mix. You determine the optimal production mix. Once you guys are able to write this nicely, would you kindly tell me why for yes, for me to be able to proceed? I would want to proceed. So anytime you hear that a question has got a key limiting factor, these will always be the basic steps that we shall always follow. Always. Basic steps. So the online ninjas are giving me green light. They're telling me, so Jaron, how about these physical students? Are they also telling me, Mwalimu, continue? Yes. So now remember, we have some scarcity in terms of what here direct labor hours, isn't it? The skilled labor hours. So let's start with number 1. We want to compute contribution margin. How do you normally get contribution margin? Oh, yeah. They are forgotten. It is selling price minus variable cost. So let's copy that table. Let's copy that table of sales price vis-a-vis revenue. So we have here selling price. I love this so much. I love this so much. I love this so much. Very easy. So we have selling price. So the selling price for A, B, and Z. Selling price for A, I can see 595. For boy, I can see 870. For Z, I can see 1095. Then we say less variable cost only, less VC. So of which I'm able to see material cost. I'm simply copying them fast. So material cost, we have 115. We have 140. We have 220. After material cost, the next one that I can see there is a skilled labor. Skilled labor. Skilled labor. So skilled labor, I can see 80, 60, 240, 80, 60, 240. And then I can see the semi-skilled. Yeah, these guys are very bright. You shall never use unskilled labor term. Yeah, whenever you're doing your management accountancy, please, even if people are not skilled, there is nobody who is unskilled. These all there. We call them semi-skilled. Yeah. Unskilled, illiterate, those things are not used by management accountants. No. No. So we have semi-skilled. So is there anybody who will be calling their juniors illiterate? I will not come to your company if I know you are that kind of a management accountant. So semi-skilled, how much are we able to see there? 60, 120, and 110. So we have 60, 120, and 110. So we have 60, 120, and then we have 110. Is there any other variable cost? Any other variable cost? Any other variable cost, or is that it? Any other variable cost? Somebody called Adam is saying additional information to skilled, correct skilled, labor for B. So for B, I'm told skilled is supposed to be 80, 160, eh? Thank you so much for that correction. I love students who correct me. I love students who correct me. Thank you so much, Millicent. You are really, really doing a very, very good job. It's pretty well known that as a management accountant, I know that we have material cost, labor cost, and then we have variable overheads, isn't it? Not cost. You know, all these are variable costs. So we call them variable what here, somebody? Overheads. overheads. So these ones, we must compute them. And I would want you to compute the variable overheads for A, given note number 2. Strike that as a serious management accounting ninja. Ninjas being guided here by Chief Ninja. Number 2, variable overheads are absorbed into production at the rate of 100% for skilled and 50% for semi-skilled. These variable overheads have not been absorbed into the profit statement above. So I want someone to absorb those variables. Can I show you how to do it? Can I show you how to do it? I like those yeses. The question is, come December 2nd, when we'll be doing your exams, will I be in your examination room? Anyway, this is not an examination room. So I have to show you, isn't it? So for A, they have told you it's very easy. You take 100% of skilled, 80. And then in this case here, 50% of what here? I'm alone, 60. Yeah, that's what they have told you to do. Very easy. A workers management accountant is really an easy thing because they have told you absorb these variable overheads into cost units at what rate? 100% of skilled labor plus 50% of semi-skilled. So is there somebody who can give me this number? The first one I'm being told is 110. So for boy, what do we do for boy? Oh, yeah. We are using these two, isn't it? So 100% of 160 plus 50% of this. I can only get answers from my physical students. My online students, in this case here, they have gone straight away to, online is really, really good. But at times there are students who have never known how to be very, very serious with online studies. Like right now, you'll get somebody who is eating ugali and fish. Yeah, you can eat mchele and other things as you study online. But fish, no. You'll not be able to concentrate very well, isn't it? So this is 220. 220. And then the last one, 295. So all of us, are we really together regarding these numbers? Yeah, thank you so much. I can also see now the online students are now talking. They're now talking. So then please subtract all those figures to give me what we call contribution margin. In this sitting, when we were marking, there are also pretty young ninjas who are bringing fixed costs here. They have that fixed cost of 100. So they bring fixed costs here, and then after exams, they call me for a drink, a soda, isn't it? They tell me, Mwalimu, this time round, we are passing. When these results are out, opposite. And then they keep on cussing CIFA, how CIFA is bad, eh? These CIFA people would want to build skyscrapers. CIFA Tower 3, using my money. You are the one who has not understood management accounting concepts very well. If you understand management accounting concepts very well, this is normally a one-term paper. So contribution margin for A, I'm being told it's 230. And somebody is telling me it's like 230, all of them. I don't know how true this is. Zote 230, eh? 230 zote, like that. Is that okay? Yeah. So that is step number 1. Step number 2, give us the key limiting factor. Key limiting factor. In this case here, which factors? You have very many factors of production. Which factor has been listed there as a scarce factor, as a scarce resource? Which note number? Tell me the note number. Which note number? You can see note number 3. There is a maximum of 28,000 skilled labor hours done what year? Available. Not unless you're a thief. It means that 28,000 for skilled labor, that is the maximum you can go. Beyond that, you'll be stealing, isn't it? Yeah. So in this case, here we can see a cap in terms of maximum labor hours. Yeah. So that is a key limiting factor. So when you come and write for us the key limiting factor, you can write this in full. Key limiting factor, because I don't want those students who will call me late at night telling me, Mwalimu, did you want to write a cap there? Yeah. So write in full, key limiting what here? Factor. So key limiting factor, you are telling me it is skilled labor hours, isn't it? And are you able to remember the skilled labor hours for each of these products? I know they're 28,000, but do we remember for each product? We wrote them somewhere. Were they 1, 2, 3 in terms of hours? Oh, yeah. Were they 1 hour here, 2 hours, 3 hours? So please divide the two. Please divide the two. Please divide the two. So 230 divided by 1, that gives me 230. Please divide the two. 230 divided by 2 will give me what figure? Eh? Or 115, eh? 115. Thank you so much. 230 divided by 3, an ugly number. 230 divided by 3. 76.67. Yeah. So remember, this one will be called the CM per key limiting factor. CM per key limiting factor. Sorry, nimeandika chini sana, eh? Are you able to see? We shall overcome. All right. CM. Please write these things in full. I want when you call me, even if it is at what time of the night, you ask me relevant questions. Yeah, don't start asking me what does that KLF stand for. For now that you're able to hear it live, write it as key limiting factor. So then after getting CM per key limiting factor, what was the next step? Don't look at your books. We rank. So come here and rank. Come here and rank. Remember, the higher the CM per KLF, the better the product. So then which one is the very best? This one takes up number 1, isn't it? This takes up number 2. This takes up number... this wasn't a very good examiner because he should have let this to be number 1, maybe number 2 and number 3. Yeah, these are nice examiners. So thanks, Milikaku. Great. Now, after ranking, we go to the last step. The last step is about what here, somebody? Yeah, the optimal production schedule. Optimal production schedule. So then you shall be able to write there, optimal production schedule. Optimal production schedule. Optimal production schedule. Optimal. 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 Optimal production schedule. Optimal production schedule. Optimal production schedule, ladies and gentlemen, we start with ranked products. Ranked products. So you will mention them as per the ranks, eh? Here it was A ranked number 1, B ranked number 2, and then we have Z touching the cow by the tail. The last one, isn't it? The last one. The last one. So after that, please give us the maximum demand, because we are so much crying for producing the maximum demand. To produce the maximum demand. So A, is there somebody who is able to remind us what the maximum demand was? A was 3,000. 3,000, right? The second one, 5,000. 6,500. Yeah. What are we worried about? How we shall reach home today? No, we're worried about our scarce resource. Scarce So today I've had so many hiccups, but we shall overcome. Everything is all right. Everything is all right. So we should be able to continue. All right. So then now we are worried about this KLF, the scarce resource, skill labor hours. For A, you gave me a figure of 1, right? 2, 3, isn't it? So give me the total skilled labor hours. Total skilled labor hours. What we'll be calling the total KLF. Total KLF. Remember the KLF that you have here is per unit. It's per unit. So you take 3,000 times 1. 3,000 times 1, my online students, to show that you're together. Of course, I know the answer, but to show that you're together, can you kindly tell me what is 3,000 times 1? To show that you're together, what is 3,000 times 1? Thank you so much. You're together. So this is 3,000. The second one will be 5,000 times 2, 10,000. 10,000. The third one will be 6,500 times 3, 19,500. 19,500. So these will be 19,500. 19,500. Then come here and combine all the KLFs, add them. So we have here hours required. Hours required. Hours required. Hours required. So hours required. So in this case here, what do we have here, ladies and gentlemen? 32,500. Do you know the hours available? How many hours do we have which are available? Wait, they are forgotten. 28,000, isn't it? So are you able to see a shortage? What is the shortage? You subtract, isn't it? 4,500 is the shortage. You subtract. 4,500 is the shortage. Ladies and gentlemen, this has happened to me once, and it really made me feel very, very, very bad. Sad situation. I went to a supermarket, Nakumat, in those old days when Nakumat used to be Nakumat. They used to tell us if you need it. You guys are young. Very good. You got it, isn't it? So I went there with my 3 kids. I have 3 kids in total. So in this case here, those guys were very young. When they're young, they'll tend to overindulge, take so many things. So he took many, many things, and one of them was very young. We put all this into the trolley. So I put this young one on top of the trolley, walked comfortably to the cashier. Those days, no M-Pesa, nothing. All right. So in this case here, that young lady was punching, on that thing like this. So took in all the goods. I needed over 50,000. In my pocket, I only had 20,000. There wasn't anything like Fuliza. And now remember, unfortunately, that is the time when you are lining. There are so many people are waiting behind you. And you happen to be a man. You know, if it was a lady, at least you can. And not your ordinary man, a mwalimu is known all over, isn't it? Because of this YouTube. So if you were in my shoes, what would have you done? You return some things, isn't it? That is what I started doing. But now remember, I have young kids, and most of the things you'd want to return are those useless things, which they themselves were selecting, isn't it? Biscuits. So do you think you return them easily without them crying? Like the last one was crying. Making, in this case here, me to be more embarrassed. What do you think did I do to this young kid when we reached home? A story for another day, isn't it? So the same case, the required here is more than what is here available. So then we must decide among us these goods, which ones in this case here do we return back to the share? So which one do you return back? According to the ranking, the one that has been ranked last is the one you should be able to deduct and return. So this deficit is normally absorbed backwards. So in this case here, this deficit, you will come and say minus what here, somebody. Fortunately, the last product can absorb all these hours. So minus 4,500. But let me ask you a question. What if the deficit was 25,000? Of course, even if I've not heard what you're saying, I know you've understood. She's doing like this. She's doing like this. Are you able to understand what she's saying? That first of all, we take away all this. But after taking away all this, you still have some extra. So the extra, you come and deduct them from. So you move like that until you exhaust your shortage. Here we are very lucky. So tell me, what is 19,500 minus 4,500? 15,000. So this is 15,000. So then you come and make for me the last column. So this last column is what we call optimal quantity. Optimal quantity to be produced. The last column is what we call the optimal quantity to be produced. How do we get this optimal quantity? You take this column, you divide by this. Check this. So you take this, like now 3,000 divided by 1. We have here 10,000 divided by what here, somebody? We am alone, but I shall overcome. Divided by 2. So the third one, I will take 15,000 divided by what here now? 3. That's how you get the optimal quantity. So to get the optimal quantity, you take the total, this column here, you divide it by the immediate predecessor. That's how you get the optimal quantity. So you take this, divide by this. Actually, normally what we do, we actually don't even write this column. We don't write this column, to be very honest with you. We don't write this column. So normally what we do, if this is 15,000, this is normally what we do. I will normally come and say this one, ta-ta, 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 ta-ta. So I say this divided by this. This divided by this. This divided by this. 3. So are you able to give me these answers? The first one is 3,000. The second one, 5,000. The third one, 5,000. 3,000, eh? 50. It's 5,000, right? It's 5,000. Sorry for that. Yeah, it's 5,000. It's 5,000. It is 5,000. So, and you have finished the question because the question was about optimal production. So in this case, I would want that production that is able to exhaust all the skilled hours that you have. But again, go back and read the question. Go back and read the question. When you read this question, my good students, for number 2, as I go, I know now you don't like me. For number 2, ladies and gentlemen, you can see the required. They want me to give them, determine the optimal production mix and the number of units yet to be outsourced. So the optimal production mix I already have gotten. What I haven't gotten is the number of units yet to outsource. So to get the number of units yet to outsource, it's very easy. The easiest. This is really the easiest. So still I'm working on number 2. I'm still working on number 2. So number 2, ladies and gentlemen, they want me to give them the outsourced units, outsourced quantity. So we have our products as per the ranks. So we have here A, B, Z. Now, after A, B, Z, ladies and gentlemen, you guys have been able to remind me the maximum demand. Please remind me the maximum demand. A was what? Yes, somebody. My online students are not talking to me. You know, I have a way of ensuring that my online students also talk to me because I've got a way of punishing them. How do I punish them? I know that all of them are not using microphones. All of them, they have their speakers on. And I know that most of them are parents. And if they're not parents, they are living with their parents. So then I'll be able to ask anybody who is closer to you to come and pinch you so that you can listen and talk to Mwali. So please ensure that I don't invoke that because I'm so sure there'll be a problem. Always talk to me. So A is what here, somebody? 3,000, 5,000, isn't it? 6,500. And do we know the optimal production? Optimal production, it is 3,000, it is 5,000, it's 5,000, isn't it? So do you think, are we going to outsource A really from outside? A, the demand is 3,000 and we have luckily been able to produce everything internally. I mean, they want from outside there 3,000, we have produced 3,000. No buying from outside. We come to B, no buying from outside. How about Z? Z, you know, they need 6,500 outside there. And we can only produce how many? Yeah, and because we don't want to disappoint any customer, we have promised them if you need it. So then what do? We go outside there and outsource. So in this case here, create the last column for outsource, of which we are not outsourcing here. Here we're not outsourcing here. Here now we are outsourcing how many units there? 1,500 units. We are outsourcing 1,500 units here. So we meet the maximum demand. We meet the maximum demand. So whenever you hear about that language of outsource, don't forget this. This is really, really common. And I know I've taught management accounting for the last 25 years. Say 23 years to be precise. So 23 years, of course, there are those years that I was teaching twice, but assuming in this case here, I've been teaching 3 lots every year. How many lots have I been able to teach this subject? Over 90 times, isn't it? 90 classes. So I've mastered this thing. All right. And that is why I told you that if I teach you and then you happen to fail, know that you are unteachable. Try, in this case here, to go and change your career, isn't it? The very best one will be which one? I mean, we must have options in life. So if it's not accounts, what else are we thinking about? IT, yeah, great. But do you think if you are not able to pass CP, you'll pass IT? They should be complementary. I should be able to do this IT and do CP at the same time, right? Yeah, and then how do you ensure that you pass round 1? As I teach you, don't be looking for so many things outside there. Always try to master the question that we do here in class. You guys don't have the time, you're working, right? You don't have the time. Yeah, and ensure that you are just redoing the question that we do here and you can never go wrong. And also don't forget the theories that we especially did with you in those formative classes. Those theories will be there. Your exam will have over 30% being theory. And our pass mark is very low, very low. So if you get, in this case here, 30%, full marks from theory, and then assuming the pass mark is 30%. Of course, they normally tell you that pass mark is 50. Yeah, assuming you have gotten 30%, you have not done any computation, the pass mark in that sitting becomes 30%. When you pass, do we care like, I mean, what made you pass? Will we say you are a theory accountant? No, so long as you pass, it is the end which justifies what the means. Of course, the pass mark is a little bit higher, but with the proper grounding in terms of theory, you can never go wrong. So the last question, they want us to give them the profit statement. So they want us to give them the profit statement. So profit statement, very easy. We know that profit is CMX minus what here, somebody? Profit, they have forgotten this. Profit is CMX minus fixed cost. So remember, we have our 3 products, A, B, and what here, somebody? Z. Are you able to remember that? I am alone, but I will overcome. I'm overcoming actually in the next 4 minutes. 4 minutes. So actually we have A, B, Z, and then we have outsource Z. Oh, they have forgotten this. Outsource Z. They have forgotten this. So anybody who is able to remember the CM for A, we have done some table. We have done some table. Okay, we can even start with the quantity. Let's start with the quantity, the optimal production quantity. The production quantity. This one here was 3,000. This one here, 5,000. 5,000. Outsourced how many? 1,500. Thank you so much. So then go back to the contribution margins and give me the answers. What was the contribution margin for A? 4, or 230, And all of them actually were 230. Do you remember that? Yeah. So how about the contribution margin for Z? So this one here will be, remember, ladies and gentlemen, you guys are bright. You know that contribution margin is price minus variable cost, isn't it? But now remember, this is something we are buying from outside there for onward reselling, isn't it? We are buying and then we. So if it is outsourced, the contribution margin will be selling price minus what you're buying, minus buying price. Because you see, we don't have our own raw materials for this. We don't have labor. We are buying a finished product. So anytime you hear about a product that you are buying and selling at the same time, The variable cost will be buying price. So is there somebody who can remind Mwalimu what the selling price for this Z? You know when you are selling, you don't now say this is outsourced. It is Z. Have they given us the selling price for Z? How much do we have as the selling price of Z? We am alone, but I will overcome. 1095. They are telling me that the selling price of Z is 1095. These great students, 1095. And do we know how much is the buying price outside? If you're to buy from note number 4, isn't it? From note number 4, they are telling us that deficit units can be outsourced from chemist suppliers at the following rates. And you can see Zeta can be purchased at how much? At 895. So then every product of Zeta we sell, which we have outsourced, we shall generate a contribution of how much? 200. I'm being told 200. Is that okay? 200. So the outsourced here is 200. The outsourced in this case here, each one of them will give me 200. So then can you be kind, ladies and gentlemen, by coming here and asking us, or rather giving us answers? I've taught this paper for so long and I know where students mess. It is in this outsourced. So if I were you today, when I go home, I will be able to straight away redo this question of outsourced. It is the most difficult key limiting factor that we have in your past paper. I don't want to choose the easiest. I always choose the toughest because I'm also tough. I'm a chief CPA ninja. So then are you able to give me these answers, ladies and gentlemen? The first one is what here? 690,000. How about the second one? 1150,000. How about the third one? 1150 again. How about the contribution you're receiving from this outsourced? 300,000. So then are you able to give me the total contribution? Are you able to give me the total contribution? Are you able to give me the total contribution? You add up everything. Thank you so much. Yeah, this guy is using a very tough name. He's using a very tough name. A name that is out of this world. 42? That's 290. So having gotten this 3290, what do you think in this case here shall we do to make this profit? You know, whatever you've done is CMX. So you slash fixed cost. So you less fixed cost. Thank you so much. So you less fixed cost. Do we have the total fixed cost? Remember, they wanted to confuse you. They gave you fixed cost per unit, but they told you don't read these ones. Go and pick a fixed cost given in note number 1. Because fixed cost, you always work with the total, isn't it? So you're able to see the fixed cost total there. 14 what here? I'm alone, but I'm overcoming. 1450, 1450,000. So when you subtract like this, you should be able to give us our net profit. And now you have answered the question. 1840, the year that I was born, 1840,000. 1840,000. So ladies and gentlemen, it has been a pleasure hosting you tonight. And I hope you'll be able to practice using the very, very same question. Otherwise, bye. Bye. Thank you, Caro. Caro, great. We shall overcome. I know now you are comfortable. I know you should be able to tell the other students in this case, and if they're busy today, they watch that video.